where you are physically located. So you have to say Kalamazoo, Michigan, or Macon, Georgia, or wherever you happen to be presently. You have to indicate that, and it has to be reflected in the minutes.
Okay, so Steve, we'll ask members to do that when they respond to your roll call, please.
Okay. Chair Bob Salisbury.
I'm here in Manatee County, Florida.
Vice Chair Randy Eberts.
Here in Kalamazoo County.
Dean Berge.
I'm also here in Kalamazoo County.
Dan DeMint.
Attending in Allegan County.
And Sandy Doctor.
Here in Kalamazoo County.
Okay, thank you. I'm going to introduce guests. First, I'll introduce two guests. First is Josh Sledge. Josh is we're going to be recommending to join the committee. And Josh, could you indicate where you are, please?
Yes, hello, everyone. I'm in Kalamazoo County.
And then Nick Griffin.
Good morning. Hello, I'm in Allegan County.
Okay, and then introduction of guests. I guess first, Chris, I'll ask you to introduce the Marion and Zhang guests, please.
Lynn Zhang and Rob Nelson. We've got Robin Fugel and Katie Richards from Zhang Financial.
Okay, and Steve, would you introduce the guests from the city, please?
Sure. We have Mayor David Anderson, City Attorney Clyde Robinson, Greg Valitstra, CCTA Deputy Director, and Sean McBride, CCTA Executive Director.
Okay, and did I miss anybody in terms of guests? I guess not. Next, we'll move then to the review and the approval of the minutes of the August 26th meeting, which were included in your package. Could I have a motion to approve the minutes?
So moved.
Support.
I have a motion and support. Are there any corrections or discussion regarding the minutes? Hearing none, I'll call for a vote for the approval. All those in favor signify by saying aye. Aye.
Aye.
Aye.
Anyone opposed? Minutes are approved. Thank you. We'll then move on to the investment portfolio assets of September 30th, Steve.
Okay. And if there's someone controlling the meeting, if I could have access to share my screen, that would be helpful. But in the meantime, I guess I will just go to page 7 of the packet.
Yeah, Steve, we've been able to follow along with the packages pretty well in our previous meetings. So if the technology is a little complicated, we can certainly do without, whoops, somebody's starting screen sharing. Okay,
I just got it working, so we're in good shape. Okay, so here we see the assets of the systems. Total net assets, we have 755 million and 800,000. Pension assets, the pension share of those assets is 630 million. The OPEB retirement health insurance system is 94.6 million, and the CCTA portion of the assets is 31.1 million. So pretty, a good quarter for us, I'd say overall. Still not quite back to where we started the year, but definitely making progress towards that. Yes, at this point, would there be any questions on the assets and the systems?
Hearing none, let's move on to investment performance. Chris, could you deal with that, please?
Let's go through the narrative briefly. The market value of the portfolio assets increased from 73.1 to 755.9 million during the third quarter, an increase of 24.8 million or 3.39%. The portfolio weighted average for the quarter, net of management fees, the 1-year net return was 3.07%. Annualized return since October of '82, when the Retirement Investment Committee was formed, through the end of the quarter has been 10.51. We'll skip down and let's just do the last paragraph. You can read the rest. The inflation or adjusted or real return for the quarter was 3.75%, as the inflation rate for the quarter was 0.96%. With the year-on-year inflation rate of 1.37, the 1-year real return was 1.70%. Since October of 82, the return on the portfolio return net of manager fees has been 10.51 nominal and 7.9% real. Going to page 11 of 59, the asset allocation graph. See the market value about 755,857. Standard deviation of 11.6, that's quite reasonable. 12 is about what I usually see. Growth of $1, 44.76, that's really, really good. Jumping through some of the blocks of the geographic exposure, again, you have about 18% exposed to non-US, but you have no non-US currency exposure. The equity asset classes, you can see what they are against their benchmarks. Equities are under 1.6 and the fixed is over by 1.6. Daily liquidity, you have a daily liquidity portfolio of about 97.4%, 2.6% is in real estate, which has a 90-day turnover rate for withdrawals. Looking at the fixed income, again, it's a AAA portfolio, duration about 6.31. The benchmark is 6.01. Genesis is within the range that they can use for matching duration to the benchmark. I don't really have anything else except in the sector allocation. I do like to point out that Jennison has been decreasing their exposure to treasuries. The benchmark has 37% in treasuries. Jennison has 14, that's a 23% underweight, and they have been doing this for the last year and a half.
Chris, before you leave that page,
Yes.
let's deal with asset allocation.
All right.
So if you look at your agenda down to the bottom of the first page on paragraph F1, there talks about a reallocation review. That reallocation review is really to deal with our policy on asset allocation and specifically following up on discussion that we've had in previous meetings about our rebalancing policy. So if you look in that page that Chris has still up on the screen, page 11, you can see that where it says asset classes on the left-hand side, we can see that our equity allocation at 68.4% is 1.6 percentage points below our target of 7%. And the fixed happens to be just above by the same amount. I think I'll just make it's interesting looking at these numbers compared to the numbers that we had previously for the foundation and the county. The county, the foundation had the biggest variance with numbers over 3%. The county was next in the 2.3% variance. And here the city is the smallest variance. Even though we manage the portfolios the same, my assumption is that the difference is really driven by the size of the monthly reallocations that you do, or when you just for moving funds for rebalancing purposes. So it's not as big an issue for the city as the other two organizations. But what we have said in our discussion is our current policy is to do a special reallocation whenever we're at 5%. The decision that we made in our previous committees is that we want to change our policy from 5% to 3%. And that is dealing with the allocation of fixed equity and real estate and leaving the allocation within those components up to the staff to manage and to be moving it in the proper direction given the reallocation process. So I'm going to go ahead and make a motion that we change our policy for special rebalancing from 5% to 3%, leaving the implementation of those when it occurs up to the consultant and the staff of the city to handle it. So I'll make the motion. Could I have a second?
Second.
Second.
Support.
I have a second from Sandy. And then I'll open it up for further discussion. Anybody want to make any comments about our decision that we previously made or as it pertains to the city? I'll have to say for the benefit of the people who are just attending this meeting. In our two previous meetings, we've had a fair amount of discussion to make sure that we clearly understood what we're doing in making this policy change and why we're doing it. It's follow-up to discussion that quite a bit of discussion that we had at previous meetings. So it's not like we're moving very quickly. It's been a well thought out policy. I think it's taken us, this is the third meeting where we've had a discussion before we come to make a decision. And I think at least in our previous meetings, there has been unanimous support for moving in this direction.
And Bob, I would just say, I mean, obviously, as we've talked about this, you know, we also know that the events triggering this would not happen very, very often. It's likely to be rare that we would reach this 3% level where we would have a special reallocation.
I think that's a good point, Dean, and the fact that how we see the city's performance going, the fact that the city has relatively frequent, fairly significant amounts of rebalancing done on a routine basis, it's even less likely for us to have a situation where we would reach this this threshold. Other comments from any other committee members? So, Steve, this is a decision that we say in our past that any important decisions have to have unanimous approval. So would you do a roll call on this for us, please?
Absolutely. I'll start with Sandy Doctor,
Yes.
Dan DeMint,
Yes.
Dean Berge,
Yes.
Randy Everts.
You're muted, Randy.
I thought I could unmute with my space bar, but I didn't. So yes, thank you.
And Chair Bob Salisbury.
Yes. So the motion passes. Thank you. So Chris, continue with the investment performance, please.
All right, we're on page 12 of 59, which is the bar graph of quarterly versus since inception. 1051 since inception, and at the last actuarial report, we're about 131% funded. Running to page 13 of 59, we've already dealt with the variances, so nothing really to see there. Really no action to be taken. Getting into the red numbers on page 14 of 59, we're seeing again the DFA in the micro and the small and the value space continuing to have negative numbers at the 1-3 year levels. But that has changed, that has turned around, not out to the 3-year level, but in the last quarter, we've had a significant rebirth or resurgence of small and value. And I think there is a one-pager that was sent out last night, and I would like to have Rob McDougall from Zane run through what has happened in small and value recently. Rob?
Great, thank you, Chris. So who is running the share right now?
That would be me, Steve.
So if you have it, that this one pager, throw it up there, that'd be great. If not, it's fine.
I'll take a peek. I may have missed that email last night.
Okay, well, the basic information here is splitting up performance of the DFA funds for the first 9 months of the year, which we're reporting and discussing right now, and what's happened since the end of the quarter. And what happened was through the first 9 months, small cap and value severely, thank you.
Oh, you're good, Steve.
Great. Yeah, very good. Thank you. So small cap and value severely underperformed over the first 9 months, but since just so happens the Pfizer announcement on phase 3 data for their COVID vaccine product, the market has rotated pretty seriously, and there have been great returns to both small cap and value since the end of the quarter. So DFA, as we would hope, has participated in that. So you'll see the first column year to date through the first 9 months, an awful lot of red, very bad absolute and relative performance. And then on the right, the quarter to date through the end of the day, Friday, it shows that it's rebounded dramatically on an absolute basis, and they've done much better on a relative basis relative to their benchmarks. So what I did point out here then also on the right-hand side of the screen, I've highlighted the US small value, and you can see how badly the sector underperformed for the first 9 months, almost down 26%, and has rebounded strongly, up 28% through the end of Friday. The one thing to point out there is the sector rotation has been a return to some of the cyclical sectors that have been left for dead, certainly through the first 9 months, and areas that DFA generally overweights their portfolio. So energy is often overweighted in their portfolio. Now it is usually small amounts, but it's enough to affect their relative performance. Well, energy was down 47% for the first 9 months, and it's come back, it's plus 30% through the end of the day Friday, quarter to date. But the one that really moves the needle, I think, for the DFA products, particularly the ones that the city is invested in, is the financial sector. So financials in particular in the Russell 2000 Value Index, financials make up nearly 30% of that index. And so you can see here, financial services was negative 14.3% for the first 9 months. And then it's also rebounded strongly, up 15.9% on a quarter to date basis. So the takeaway here is that we know small and value has struggled. The last decade hasn't been great, and particularly since 2016, which was the last year that small and value outperformed, it's been tough. But what we look for in DFA is consistency of approach. And so what we would expect, what we hope is that when there is a return to small and value, a rotation and outperformance in those two factors, you would hope to see DFA participating in it. And at least on a quarter to date basis, that's what the data here tells us.
So that's a very helpful, that's a helpful analysis, Rob, and thank you. I think for the benefit of the city attendees, the other thing that our committee has been doing in the past months is we had a virtual due diligence session with DFA to make sure we understand what their thinking was, continue to understand what their thinking was related to the tilt to small and value. And various of us have participated in other meetings. And I think the takeaway message is that while there's been an unprecedented underperformance of small and value, at least up until November, for a very long period of time, there's still belief that in the long run, a tilt to small and value is an appropriate strategy. And I think the committee members going through all of this due diligence process continue to believe that we have the right strategy in the mix of the funds, irrespective of some of these red numbers that we're seeing on the performance. I'll stop and ask if any other committee members want to add to that discussion. Hearing none, Chris, so why don't you proceed, please?
All right, if we can get back to the rates of return by managers on 15 of 59, just a real quick observation with REEF and with Vanguard. And you see the Vanguard red numbers year to date and 1 year. Understand that Vanguard is valued daily, and that REEF is valued quarterly and annually total. So don't take a lot from that, but do look about the 7-year time frame where both REEF and Vanguard are substantial contributors to the portfolio. So that's really about all I have for there. I don't want to spend time there. Just a comment on page 17 of 59, the weighted average manager fee is 29 basis points. And for most of the portfolios we're managing, it's between 29 and 32. So that's pretty good. Now, my understanding is DFA is reducing some of its fees in the first quarter of next year. So we should see that number be reduced, maybe by 2 or 3 basis points. And every basis point helps. I don't have much else. Just running through the rest of it, Bob. I really don't. Oh, on there is a page 24 of 59 in the 4 quadrants of the risk versus return. This is at 5 years. Usually, what you see is the optimum place to be is upper left, Reef has been in the upper left, although low upper left, for a good 5 or 10 years. They did fall below in the lower left quadrant, which tells me there's something happening in real estate where they're being stressed. They're still better than everybody else, but that's an interesting change. I don't have anything else, Bob, so we can continue.
I'll ask committee members if they have any comments or questions for Chris on investment performance.
Just real quickly, Chris, you mentioned the reef being in the lower left-hand corner now instead of the upper left-hand corner.
Yeah.
Is that because the portfolio return has moved, or is what's happened?
Yeah, I think the real estate sector, I think, is being stressed.
Is being
Yeah.
stressed, or the portfolio is now higher than what was earlier, or not?
I'm saying higher or lower? What do you say?
Higher. If that line goes down, then reef moves up. That's all. The horizontal line there.
Yeah, no, that's it's where reef falls out. I'm not quite sure I understand it.
Well, see the horizontal line that you're saying that divides the quadrants.
Portfolio. Yeah.
Yeah. If that line goes down, then the reef goes up into the left-hand.
Yeah, it
upper
would,
left-hand.
but the reef is a contributor to that portfolio.
Not much though.
No, not a lot. I agree, and that's why it was interesting that it fell down below that, which tells
Chris,
me,
I think to answer Randy's question, you're saying that it's more a decline in Reef's performance than it is an increase in the overall
yes,
Yeah.
portfolio's performance. Yeah.
Thanks, Dean, for clarifying it. Yeah.
yeah, and that's significant. That's the first time I've seen that happen.
Thank you.
So that's all I've got.
Any other comments or questions for Chris on investment performance? If not, Steve, let's move on to the review of expenses.
Okay, so here we have review the third quarter expenses. Pretty standard fees from GRS. I think everything for the most part is pretty standard this quarter. The only one I'd like to really kind of point out again is, State Street's still behind in their billing. We did have our E&O insurance premium come due in this quarter. And I got more on that during that section of the agenda. And then as we go through the investment manager fees, just to continue, you can notice a sharp decline in the Blackrock fees. They used to be around 22,000. Now we're hovering around 9,000 per quarter. So that's a huge savings that Chris was able to achieve through negotiations with them. Other than that, pretty standard expenses. So I guess continuing through the OPEB or the pension expenses, 8,399,702 for the quarter. OPEB tracks pretty similarly. Healthcare expenses continue to stay, a little bit lower this year than in years past. I think that's largely due to everything continuing to be closed. Just for reference, in some of the years past, our annual healthcare expenses have been around 12 million. This year, we're tracking to be closer to 9-10 million. So that could be a significant reduction compared to normal. Everything else in here.
One would almost think those expenses would go up.
I think just largely people are trying not to go out, and I know for a good portion of this year, a lot of regular doctor's offices have closed. I know personally, my doctor's office, as far as I know, is still closed except for emergency or vaccinations. So I haven't even personally been able to get to a doctor this year.
Yeah, makes sense.
Yeah,
Wow.
and also a lot of the electives are being postponed for another time.
So
Yeah.
we may see a spike in 2021, but remains to be seen, I guess.
Yeah.
One thing I will point out is, we are moving forward with the new retiree healthcare plan in 2021, which, based on the actuarial study, would save roughly $55 million over the life of the plan. So hopefully we see those expenses continue to stay depressed as we move forward, just based on the changes that the city has made to the retiree insurance. So continuing through, everything else pretty standard. We had our annual OPEB valuations from GRS, and the OPEB expenses for the quarter. I'll continue through, including investment manager fees, would be $2,817,585. So I'll open up to any questions.
Questions for Steve? I think we need approval of this, so could we have a motion to approve these expenses?
So
So
moved.
moved.
Support.
Support.
We have a motion and support. Any discussion? Hearing none, Steve, let's do roll call for that, please.
Okay. Sandy Doctor,
Yes.
Dan DeMint,
Yes.
Dean Berge,
Yes.
Randy Eberts,
Yes.
and Bob Salisbury.
Yes. Motion's approved and the expenses are approved. Thank you. So Steve, let's move on to the cash flow.
Okay, I'm gonna try and make this a little bigger to fit. Focusing on the third quarter, we're looking at the pension system here. Really total net cash flow prior to our liquidation transfer of negative 7.6 million. Pretty standard when we look at the other quarters, and just continuing the reliance on investment returns for this system, which has so far proven to be able to cover the expenses. I guess nothing out of the ordinary in the cash flows, as a lot of that was, I guess, just reviewed in the expenses. So I guess open it up to questions or comments on the cash flow for the pension system.
Do I hear any questions? If not, maybe we can move on to liquidation, Steve.
Okay, do you want me to cover the OPEB system real quick?
Oh, yeah, I'm sorry. Yeah, sure. Go
That's
ahead,
okay.
Steve. Yeah, go ahead.
Kind of same thing. We have, a little bit more support from employer and retiree contributions for this system. However, still ultimately reliant on the investment returns. And, once again, nothing too out of the ordinary here. So I guess any questions on the OPEB cash flows?
Steve, I just had one, which is that, the Medicare premium payments in the third quarter were significantly above the projection, and actually the total for the year is now significantly above the prior year. So I just wanted to ask about that.
Yes. So I guess, thank you. I was going to actually add that in my mind to mention during liquidations. So this year we, in movement to that new retiree healthcare plan, we had a section of retirees who had been offered a incentive to move to the Medicare, which they were not previously required to do. And that's where you see that big spike. Is a lot of that is those incentive payments. I think we will normalize closer to, 125,000 for ongoing Medicare premium payments as part of that agreement. But the incentive is really the large portion of why that spiked so suddenly right now.
Okay, and obviously your expectation is that's going to be a benefit long-term to the cost of the OPEB by having people move to Medicare.
Yes, I believe that the payment for Medicare premiums will be well more than offset by the savings due from moving to this new plan.
Yeah, okay.
When
Thank
did,
you.
when did you do that, Steve?
The plan officially starts January 1, 2021.
I can remember John Nelson ranting in the late 80s that that Medicare was not involved here. So this took a while.
Yes.
Okay.
Okay. Continuing on then, I guess, to liquidations. Starting with the July liquidation. We're, I guess, slightly out of order here, but liquidated out of Jennison being the largest surplus category. As you can see here, I guess, looking at it, you see Blackrock with a large surplus, but overall equities were still down to target. So we continued with Jennison here. And this is where we did have an extra liquidation largely for those additional benefit payments. They were a little larger than expected, so we had to do an extra liquidation in July. Again, that came out of Jennison. Moving to August, things started to flip a little bit where the surplus for Blackrock did get to a significant portion, was significantly larger than the surplus for any other item, even though equities were a little under. We felt it prudent to liquidate out of Blackrock at that time. And again, same story then for September, with Blackrock being significantly over target. So any comments or questions on the liquidations?
It's interesting then when you have a single manager that's way over, like at BlackRock, but the whole asset class of equities was under. It presents something of a dilemma as to how to do the liquidation. I'm not criticizing at all what you did. I think it's appropriate, but it's just an interesting situation that's occurring in that instance.
Yeah. It doesn't occur this dramatically very often, but it did happen.
Okay, any other comments on liquidations? If not, Steve, I see we have actuarial reports here. Anything to report there?
Nothing to report under actuarial at this time.
Okay. Chris will go to activity reports.
All right, everybody was able to get in and read the activity reports. But the only one that I wanted to dwell with shortly was the Blackrock study. And it was pointed out, BlackRock did a review of the city plan. The price of that was supposedly free, but what they wanted to do is they wanted to make a sales pitch for private equity. But that being withstood, it was a pretty good study. They had 69 companies. And the first 2 pages that you see in the report, which you should be able to get onto through the link, is that the city was the first in 10-year returns by almost 2%. And it was the first in the funded ratio, having about 130% funded, where the next best was 85% funded. Not only that, you were the smallest of all of the funds in the study. I had priced a study like this out once, and it was costing about $50,000. So we got this for free, but like I said, we had to withstand the marketing spiel during the presentation. So I will try. Go ahead.
Let me pick up on that, Chris. So I think the important takeaway from when you look at that BlackRock comparison is how you interpret the results. BlackRock pointed out that the city of Kalamazoo had a very low weight to alternative investments. In fact, the only weight is our real estate weight fixed, and a high weight to equities as compared to most other pension plans. But then they pointed out that we had a very high weight, that our return over the long run was an outlier. So they didn't make the causal relationship that our high return compared to the peer group was probably caused by our asset mix. They simply came to the conclusion that they ought to try to convince us that we should invest more in alternative investments, which is what they were trying to sell us at that point. But it sort of ignored that maybe there was a causal relationship between our good return, our good performance, and our good funded ratio and that asset mix. And that's why some of us, myself probably more than others, took a little bit skeptical view of their conclusions.
Yeah, I was more interested in the historical rather than their conclusions. I think it had value to that extent. It would be difficult to justify doing something that would hurt yourself, which is what they were recommending. So, but I'm going to do the same for the county from the perspective of getting historical information. That's it.
So the other thing I'll say about activity reports, I think it's notable that we're able to conduct quite a bit of due diligence using virtual sessions. And it turned out to be a very useful exercise because sometimes, even before the pandemic, it was hard for us to do the travel and get everybody's schedules coordinated. So I think it was helpful to get this done on a virtual process.
You know, Bob, this is Dean. Hey, Bob, this is Dean. One other thing, just going back to the BlackRock thing. I mean, I think it would be fair also to point out that it's not, you know, the committee has had discussion, you know, fulsome discussion, I would say, regarding private equity and those matters. And something that we won't close our mind to, but I think it's just fair to point that out. And, you know, even listening to BlackRock talk about it and make their pitch, I think is just another data point in that, you know, in that realm.
Yeah, that's a good point, Dean. Thank you for mentioning it.
That's all I have, Bob.
Okay, any comments from other committee members about this? How about future due diligence and education, Chris?
No, as you said, I think we'll continue virtual. I will set up REEF before year end, and then we will have had all of the managers for diligence.
Okay. We'll move to derivative reports then.
You've got the derivative reports, both Blackrock and Jennison are within the parameters. I think I have explanations there. Sandy brought up that she would like to see the amount of benefit derived from securities lending. I will gather that and I will put that in the next report.
Okay.
And that's all I have.
How about the Jennison quarterly review or overview?
It's just a good report, a good overall market view, and feeds into the rest of the reports we have. I don't have anything else there.
Articles of interest?
Nothing really, just sort of an explanation of the FANG stocks and a little bit about Deutsche Bank and future prognostications. And the reason I threw that in there is just remember that Deutsche Bank owns REEF. And so sometimes their thought process will filter down, although Deutsche Bank has not interfered with REEF at all since they took them over. So
And I'll also say that the one thing I can be assured of is their future prognostications will be wrong. We just don't know.
Yeah, right. But it was interesting. They talked about a lot of things. So, that's it.
Anything else on communications, Chris?
No.
Chris, I'm sorry. Could you said Deutsche Bank owns reefs?
Yes.
Our reef, is that
yeah.
right?
Yes.
Our reef. Okay.
Yep, owns our reef. They have not interfered with them in any way as of this point, but yes, they do own them.
I think it'd be a fair guess that someday they'll sell reef.
Yes. I think the people inside would like to buy them out, but the price is too high.
Okay, I'm going to move to the old and new business section. The reallocation review we've already done. The nomination of new committee members, I'm going to move that to the last item on the agenda so that we can have the discussion. When we have that discussion, we'll excuse Josh and Nick from the meeting. E&O insurance. Steve, can you update us on that, please?
Sure. I just recently received the review that we were having done on the insurance. Everything came back that the insurance that is in place through Cincinnati Insurance Company is adequate and should cover the needs. If you would like, we can ask Sarah Brundage from Honigman to come to a future meeting, or we can or I can share the report for the next meeting. It just came in extremely late to add it to this agenda.
Steve, I don't think we need to ask her to come to the meeting, but I think if we could just see a summary of what the coverage is for all the members would have that.
Sure, we'll do.
Okay, then I'm going to go to the structure of future meetings. Steve, what do you want to tell us there?
Well, I can kind of preface it that, obviously, through the end of the year, the state has passed Open Meetings Act legislation that allows us to meet virtually. We're waiting to see whether they extend that, but I would really like to turn this over to City Attorney Clyde Robinson, as he is the expert in this area.
Thank you, Steve. As good as this group is in trying to forecast what may happen in the future, I would like to use that knowledge and see if you can apply it to legislation. It probably is more difficult than applying it to the financial markets. What happened? Let me give you a background as to understand where we're at today, where we were before. At the beginning of the outbreak of the COVID-19 pandemic, there was a split in legal opinion among particularly municipal attorneys or attorneys for public bodies, whether or not you needed a physical presence of the body in a physical location in order to have a meeting. And then there was some question as to how many could remote in. the opinion I took, and shared by others, is that you could have members remote in provided that you had a quorum in a physical location. So for this body, it was basically 7 members. As long as you had at least 4 individuals who were gathering in the same place in a physical room, then the other 3 could remote in. If you didn't have that, if you couldn't get to that 4, then you don't have a quorum in a physical place, and therefore you couldn't hold the meeting. There were other attorneys who disagreed with that, but I felt that the better view was that, as I read the act, there had to be a physical presence. That was my feeling was buttressed by the fact that a few years ago, the legislature made a change in the act so as to permit the remote participation by a person in the military. And because of that, it seemed to signal to me that, again, remote participation was not particularly embraced by the legislature. So now we come to March of 2020, and how do we have a group of individuals physically gather in a location so as to keep physical distance, and because you have to open yourself to the public, how do you do that? As you know, if you followed the news media, the governor, under 2 separate acts, one from 1946, the other one from 1976, issued emergency orders permitting public bodies to gather remotely or participate remotely through electronic means. In late September, early October, her executive orders were determined to be unconstitutional. In fact, one act, the 1946 Act, was thrown out entirely, and so that is a dead letter. The 1976 Act limits the governor. She can issue an emergency declaration, but it's only good for 30 days. After that, it has to be extended by the legislature. That was upheld. And what the court ruled is that any executive orders that were issued after that initial 30-day declaration were of unknown void. What the legislature did, and I had been working with, as I'm a member of the Michigan Association of Municipal Attorneys Legislative Committee, working with lobbyists for the Michigan Municipal League, was to propose some legislation well before the court made its decisions as to kind of opening up the Open Meetings Act to permit electronic meetings. That bill, if you will, or that language was presented to the legislature, but we got a lot of pushback. According to the Michigan Municipal League lobbyists, members of the legislature on both sides of the political divide were concerned that local officials would take advantage of the ability to remote in and not really be accountable to the individuals who elected them to office. They were really, and this is unfortunate that the legislature don't, as a rule, seem to trust local officials. And so the language that was proposed was skinny down, if you will, or gutted so as to remove a lot of the discretion. So what we have now is a tiered approach that they made it retroactive back to March through the end of this year, that you don't have to have any reason in order to meet remotely. After the first of the year, you have to have a declaration of state or local emergency or disaster in order to meet remotely. And you have to make the determination that in order to meet remotely, you would be placing members of the public or members of the public body's health at risk. But it is premised upon this declaration. Again, as I indicated, the ability of the governor to issue declarations is somewhat circumscribed. One of the things, as I said, she can declare a 30-day emergency. What the court said is that she could not declare seriatim declarations. That is, after the end of 30 days, I declare another 30 days. They said, no, that's not the intent of the act. You get one shot at one bite of the apple, if you will, and after that, it's within the power of the legislature. So she's declared that COVID disaster. I don't know that she's going to be able to declare a new one beginning the first of the year. Now there is, and in the court's opinion where they struck down the emergency orders of the governor, there was reference by one of the judges who was writing in a concurrence that back in the 1918 epidemic, the legislature passed legislation that gave a lot of authority to the state health officer, which is now the director of Health and Human Services. And the more recent orders that we've been under have been issued underneath that authority as opposed directly from the governor. They've been issued by Director Gordon, acting in his role as the director of the Department of Health and Human Services. So that's the state that we're under now. But again, it doesn't declare for state of emergencies. It doesn't have that ability. So beginning January 1st, there's going to be some problems in trying to meet remotely unless you can meet certain criteria. What I've done, again, we kind of, the group that proposed the initial changes to the legislation regrouped. I played a large role in redrafting a new amendment. We have been told, when I say we, the members of the Municipal Attorneys Association have been told by the Michigan Municipal League's lobbyists that the legislature is willing to look at the Open Meetings Act again during the lame duck session. Lame duck session, the legislature's been out of session through the hunting season. They only began starting in session on Tuesday of this week, after November 30th, when firearms deer season ended. And so this is only their second day back in session. And hopefully between now and I think they're scheduled to adjourn for the end of the year in only a couple of weeks. I don't have the dates in front of me, but I think it only runs through the second or third Friday of the month, because they want to be off for Christmas. And after that, in the new year, the new legislature will take office, at least on the House side. So what we are doing, and the Michigan Municipal League had a press conference yesterday in which one of the changes, or one of the things they're going to aim to get done in this lame duck session, is changes to the Open Meetings Act. To that end, we've attempted to extend the no reason to meet remotely or virtually rule until middle of next year. I think July 1st. That's one proposal. That may get cut back to more like April or March. We'll see what happens. The second one is that, and this was again the concern on the part of the legislature, as it was told to me, that particularly elected and officials that serve with some type of remuneration or salary have an obligation from their perspective to be present and accountable to the electors. And I actually use this board as an example in that these are voluntary individuals. They are taking time out of their day. They're not paid. They perform an important function, much like zoning board of appeals or planning commissioners as well. And why are you going to hold these volunteers to the same standard you would hold people who get elected? And that seemed to resonate. So there is, at least in the draft that I prepared for legislative consideration, an exemption for boards such as yours, where you serve without compensation and you're a volunteer appointed board. We'll see what happens with that. I was told that there was some willingness on the part of the legislature to consider that kind of an exemption, because it obviously is not the same as, raises the same concerns in their mind as a popularly elected or compensated official. So I go back to the remarks I made when I started. If you have a crystal ball and you can figure out what the legislature is going to do, I would appreciate that information. And by the way, if you know what the lotto numbers are for next week, let me know those too. I have no idea where the legislature is going to go with this, but again, we've been told that this is, number one, a priority of the Michigan Municipal League, and there's a willingness on the part of the legislature, particularly the House of Representative, the senator who really spearheaded the First Amendment that was adopted in October. So there appears to be some willingness to look at this. How far they will go in accepting the recommendations or the language that has been proposed by the Michigan Municipal League we'll just have to wait and see.
Clyde, Clyde, is there any laws or rules on this hypothetical I want to present? And that is, what if the legislature does not say we can meet as a virtual committee any longer as of January 1st, but we still have at least a quorum on the committee that feels uneasy about coming out to meet in person? What would happen?
That's a good question. The best I can say is that where you have an individual, and I'll say this, that beginning in January 1st, you have to, again, have some concern that meeting in person would risk the personal health of a member of the public or a member of the public body. In fact, there was on the municipal attorney's listserv yesterday, there was an inquiry from the Ann Arbor area about an individual who is receiving chemotherapy, and whether or not would that individual, because they're an at-risk individual, and going out in the public, have to attend to meetings, or can they use that ability or that inability or concern about their health to remote in? So those are some issues that we still have to grapple with. I can't give you an answer, and unfortunately, probably my explanation to you has been as clear as mud, but that's where we're at this point.
Well, Clyde, thank you for that review. I'm not going to stick my neck out and make a prediction as to what's going to happen. So we'll just stay tuned pending our next meeting scheduled for February 24th. And decide how and where we'll meet accordingly.
I think that's the best course of action. It's to stay the course, and then if we need to make adjustments based upon what the legislature does, and there's still the possibility, if they don't do anything by the end of December, that could be a very high priority for the new legislature when they meet after January 1st. So it's very possible that in the next 90 days, there may be a change in the law, even if it doesn't take place in the next 2 weeks.
Okay, so let's move on from this subject unless any other committee members have any questions for Clyde. Thanks, Clyde. Chris, let's deal with the PCIC report.
Okay, you have the PCIC report. It's relatively simple, so I really don't want to go through it very much. Are there any questions? Because looking at time, are there any questions or comments or concerns that you have about the PCIC report? Because there's an issue I want to deal with. All right, hearing none, what I would like to propose is we've gone through, and within the PC, this particular portfolio is custody at Schwab. Schwab's lawyers are giving us a whole lot of trouble when we're trying to make a change. So what I would propose is we make a statement and put it in the minutes, the minutes of the city, because the city's the owner. But I would like to have a statement saying that we would like to change the signatories from current to Mr. Vicente and Melissa Fuller and place it in the minutes so that I can send it to Schwab either this time or in the future. And we have a document that says, okay, this is what was said and this is when it was approved. And then their lawyers don't have to go through the shenanigans that we've been going through. We spent an awful lot of man hours on this.
So Chris, would the resolution or the motion be something along the lines of saying that we recommend that Steve Vicenzi or whoever he designates should be as authorized signer on this account?
Yes, and then we'll put it in the minutes. Then the minutes has a secretary, the minutes has a date, and we can send it to the lawyer.
Okay, that's my motion, that Steve Vicenzi or his designee is authorized to be a signer on this account.
I support that, Bob, but I have a question. And so that means that with Steve as a signatory, Does that mean that we then have power to change the allocation?
You always have the power to change the allocation.
So what are the lawyers all uptight about?
Just documenting who is the owner has nothing to do with the asset allocation.
Okay.
Because the city is the owner, but you never have a meeting like we have meetings. You never have one for the per care account. Otherwise, we would have to formally have a meeting, have Steve there, have the city manager there. If we could just put it in the meetings here, then I have a paragraph that I can send to the lawyers and say, okay, execute this.
Okay.
Steve, are you happy with that resolution, or is that okay?
Yes.
Is there any other discussion around? We have a motion that I made, a second by Randy Eberts. Any other discussion around that motion? Hearing none, all those in favor signify by saying aye.
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 All right, I
Aye.
appreciate it. It'll appear in the next minutes, and then I can send that out to the lawyers if we have any issues. I appreciate
Okay.
it very much.
Thank you. Anything else on the PCIC?
No,
Okay, in terms of future meetings, they're noted here on the agenda. I'm going to do around the table. Randy, do you have anything?
No, thanks. Mm-mm.
Dan?
Nothing.
Dean?
Nothing here.
Sandy?
No,
I have nothing. Anybody from the city, David or Steve, anything you want to raise?
I just want to say two things really quick. One is that as of yesterday, city manager Steve and his team provided the budget for 21 to the city commission as required in the charter. That's available if you're interested going to the city website, right, Steve? I believe there's a link there to get to that budget.
Yes, the link is, if you go under departments, accounting and budget, you then have to go to a link for budget. Otherwise, I'm trying to pull up, I don't want to misspeak on this. It's a really simple link. It's, give me one moment here.
So while Steve's looking for that, that's something that is required every year. And obviously that's a lot of work, and I appreciate all the work that they've done on that. And just the other thing I wanted to say is, in the midst of all this that's going on, everything we're dealing with in the country, large and small, health-wise and otherwise, this work, this quiet work that happens, somewhat behind the scenes by all the individuals who sit on this committee. I mean, this is what is foundational for the capacity for our public entities like the City of Kalamazoo to do the good work that happens. So I just want to say thank you so much for your work here, despite everything in 2020. And you look at this budget and you think about how much we spend supporting retirees and meeting those commitments. I mean, this is how that happens. So anyway, thank you for all that.
Thank you for your comments, David. Steve, can we deal with public comment?
Sure. And I'll just, before we get to public comment, the easy link is kalamazooCity.org/budgets. You can find the budget on there. It's this year we've moved to a totally virtual budget. So completely new look, hopefully gives the public a better understanding. Then I guess moving on, do we have any public comment today?
There are no public comments at this time.
Thank you.
Okay, so I'm going to change one of the decisions that I made earlier. I will not ask Josh or Nick to leave the meeting at this time, since we're going to have another one starting any moment now. We have had a process to try to select new members. Our committee has agreed that we want to recommend Josh Sledge and Nick Griffith to be new committee members. This would be a recommendation to the board. I'm sorry, the city commission. Is that right, Steve? And so I'll make a motion that we nominate Josh Sledge and Nick Griffith to be appointed members of this committee in recommendation to the city commission. Could I have support?
Support.
Okay, support. Thank you, Dean. Any discussion? Hearing none, since we want to be unanimous on this, Steve, could we have a roll call, please?
Absolutely. Sandy Doctor,
Yes.
Dan DeMint,
Yes.
Dean Berge,
Yes.
Randy Everts,
Yes.
and Bob Salisbury.
Yes. So that recommendation will go to the city commission, and I'm not sure of the exact process, but appreciate it, Steve and David, to be following up on that. And hopefully we'll make Nick and Josh so we can welcome them as official members.
I would only
I'll-
point out that when this goes to the city commission, I'm sure they're going to approve, but it would be nice to have CVs for the two new members so the commission can take a look at their backgrounds and the like.
Yeah, I'm sure we'll do that, Clyde, because we actually had them for the process that we followed to get the committee members to review that. So hearing no other business, I'll adjourn the meeting. And Steve, it's already time for the FFE meeting. My understanding it's on this same system. Is that correct?
Yes, we'll just continue through this meeting. So anyone, I guess, not part of that meeting can jump off at this point. Otherwise, we can move forward with opening up that meeting.
Okay, I'll call to order the meeting of the Kalamazoo Foundation for Excellence. And Steve, I don't know if we have any FFE members on at this point in time. I haven't noticed anybody coming on.
I don't see any, and I didn't necessarily expect any to show up today.
Oh, you did not expect any. Okay. So if that being the case, then let's do the roll call, Steve.
Okay. Sorry, one moment here. Lost my screen. Sandy Doctor?
Here, do I have to say where I am?
Yes, we could just repeat that again.
In Kalamazoo County.
Okay. Dan DeMint?
Attending from Allegan County.
Dean Berge?
Here in Kalamazoo County.
Randy Everts?
Here in Kalamazoo County.
And Chair Bob Salisbury.
I'm here in Manatee County, Florida. Okay, we won't do introduction of guests because we have essentially the same people on as before. Let's deal with the minutes of the August 26th meeting, which were included in your package. Could I have a motion to approve those minutes?
So moved.
Support.
Any discussion or correction of the minutes? Hearing none, all those in favor of approving them as drafted signify by saying aye.
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 Anyone opposed? Minutes are approved. We'll go to the investment portfolio assets at September 30th, Steve.
Okay, let me just pull that up here quickly. Pretty straightforward. We have 50% or 54.2% in stock, 45.7% in bonds, 0.1% in cash. I'm just trying to pull up.
Yeah, I'd say the total is $89.6 million. That's on page 11 is what I have.
Okay, thank you. Sorry, a little out of order here. So there's the total. So we've seen a good increase this quarter. I think we had started when we transferred into this investment portfolio. Chris, correct me if I'm wrong, somewhere around 82 million. So we've seen quite a bit of growth in the first couple quarters of this year since we've transferred. I believe that was back in May.
Yeah.
Any questions, comments on the assets of the fund at this time?
Nope. Chris, let's deal with investment performance.
All right, the narrative quickly, understanding we've only had this portfolio less than half a year at this point. The market value of the assets went from 85.5 to 89.6 during the quarter, an increase of 4.1 million or 4.8%. Very similar to the city, except that this asset allocation is a 50-50 between equity and fixed. Have two managers, Blackrock and Genesee. The inflation adjusted or real return for the quarter was 4.03% as the inflation rate for the quarter was 0.96. Since May 1 of 2020, the return on the portfolio net of manager fees has been 10.6 nominal and 9.0% real. Taking a look at page 9 of 36, again, there is no, in this portfolio, you have no non-US geographical exposure and no non-US currency exposure. In the asset classes, this portfolio again is a 50-50. And in this one, because of the timing, the equity is 4.2% over and the fixed is 4.3% under. We can have the discussion about rebalancing now or later, Bob.
So let's go ahead and do it now, Chris.
Yeah, I agree.
So in keeping with the decisions that we made for the city and the other organizations, I'll make a motion that we change the asset rebalancing policy, so to say that special rebalancings will be done when the variance from equities or fixed income reaches 3%, and we'll leave it to the staff and the consultant to deal with the implementation. So that's my motion.
So moved, but I have a question then. Just a real
Okay,
quick
go ahead,
one.
Randy.
Yeah. Yeah, I support the motion definitely. But I was just curious, do we have a hard, like with the city retirement funds, do we have a hard rebalance at the end of the year to 70-30?
As far as I know, this is not a Public Act P14.
Okay.
Is that right, Steve? Clyde, is that correct?
That would be my opinion. This is not a pension fund. This is a nonprofit fund that is created by the city.
Okay, so even though the city owns it, there's no hard rebalance. Okay, thank you.
We could make one, Randy, but it's not a.
No. I don't. No. I don't want to add that.
Okay. All right, that's good.
Okay, so we have a motion and a support from Randy. Is there any other discussion? Hearing none, Steve, could we do a roll call on this, please? Because this is a major decision.
Sure. Sandy Doctor,
Yes.
Dan DeMint,
Yes.
Dean Berge,
Yes.
Randy Edwards,
Yes.
and Bob Salisbury.
Yes. Okay, that motion is carried. Chris, would you continue with the investment performance?
Steve, we may or may not get more money in. When is the first time we think we're going to have a draw on this?
The first draw would be, I'm trying to remember, would be
It's
February.
not for about 2 years.
Yeah, I believe it would be February 2023.
Yeah. So that makes this rebalancing all the more not crucial, but important, since we don't have inflows and outflows to the extent we have for an operating entity like the pension fund. So, but I sincerely doubt that that's going to happen very often.
So Chris, now that you have the motion and the approval, you will go ahead and implement this rebalancing. Okay.
Yes. Really, I don't have a whole lot because it's just such a short time span.
Right.
The fee on this is 13 basis points. We got a very good rate from Blackrock and from Jennison also. And the rate that we got from Jennison was predicated on the amalgamation of all of the assets we have at Jennison. So if we were to have done this ourselves with just the foundation, it would have been 25 basis points for them. It would have been 50 basis points instead of 25 basis points. So we got a little bit of a break there. There's really nothing more that I have. We'll deal with inflows if they occur. Outflows are not for another 2 years. We're going to keep the same asset allocation until about 350 million, at which time we will come in and we will probably do a recommendation for a reallocation of the assets. But until it hits about that point, I think the committee is comfortable going with the 50-50. Just want to confirm.
I think that was our understanding, unless I hear any suggestions otherwise from other committee members. Hearing none, sounds like we'll stay the course, Chris.
And I am good.
Okay. In terms of communications, derivative reports, and Jennison quarterly review and articles of interest, anything important that we ought to bring up?
No. No.
Same with due diligence, education, and governance. Anything important there?
Nothing really. What we will be doing is virtual from here on out in the foreseeable future.
Okay. In terms of old and new business, I'll go ahead and deal with the nomination of new committee members
Hey,
right
Bob,
away. Yes, sorry.
before we get there, I think, don't we have to go back and approve expenses, or did I miss something?
Oh, thank you for catching that, Dean.
Yeah.
Yeah, Steve, let's go back to expenses on page 16.
Okay. Here we have the expenses. I actually do want to bring up, there was a printing error I noticed this morning. We're supposed to have ones denoting items that we had approved at the last meeting. Just due to timing and understanding, we got ourselves a little crossed on when the invoices came in and when they were actually paid out. So we approved some of those early. In total here we have 168,712 since inception. What I'm asking for at this point is request for approval of $152,196 in expenses.
We have a
there-
motion to approve those expenses.
So moved.
We have a motion, support
Yes, support.
from Dan. Any discussion? Steve, we'll do roll call on those.
Okay. Sandy Doctor,
Yes.
Dan DeMint,
Yes.
Dean Berge,
Yes.
Randy Everts,
Yes.
and Bob Salisbury.
Yes. Thank you, Dean, for catching me up on that agenda. So we'll go to cash flow next, Steve.
I think that's on 17. So obviously not a lot of activity. We just had the expenses that we just reviewed go out, and the net investment activity that Chris reviewed. So I guess not a lot here at this moment. So any questions or comments on the cash flows?
And just following up to what Chris asked earlier, no expected outflow other than expenses for a couple of years. And we're still waiting for other contributions, and there's a big uncertainty about that, correct?
Correct. As I would learn anything, I would happily share it with the committee as far as inflows. And there are current agreements with the city to cover any outflows through 2022. So our first draw would be that February 2023.
Any other comments or questions about cash flow? All right, now I'm down to old and new business, nomination of new committee members. In keeping with the decision that we made for the city and our plan to keep the committee memberships the same, I will make a motion to recommend that Josh Sledge and Nick Griffith be appointed to the committee. That's a recommendation to the board of the FFE. Could I have support for my motion?
Support.
I think Randy might have been first on the support. Any discussion? If not, Steve, could we do roll call on this decision, please?
Sure. Sandy Doctor,
Yes.
Dan DeMint,
Yes.
Dean Berge,
Yes.
Randy Everts,
Yes.
and Bob Salisbury.
Yes. So the motion carries, and we'll look forward to the FFE board's approval for that, for Josh and Nick. E&O insurance, we talked about at the city meeting. Steve, is there anything you need to add to that?
I guess just one update to that. I can be bringing that report to the next meeting. However, it was noted in that report that there may have been a word missing, or intentionally or unintentionally, from the insurance policy. So we're trying to get that clarified. And it was a pretty important word as to whether it was related to consulting or financial consulting. We're trying to add the word outside to then make the insurance policy that would actually be effective for consulting from an inside entity such as this board. So that's work that I'll be doing over the next quarter to try to get that straightened around.
Okay, we'll look forward to getting it cleared up, because we certainly want to make sure that our committee members have coverage.
Yes.
A structure of the future meetings. This is the discussion that we had, the same as the discussion we had in the city meeting, Steve?
Correct. I guess, from this standpoint, Clyde, would you want to give a real quick overview of what we went through in the last meeting?
I can certainly do that. The quick overview is that the legislature in the lame duck session is considering further amendment to the Open Meetings Act. We'll wait and see if that takes place. My advice is that this board continue on with scheduling virtual meetings. And if there's some change between now and the next meeting, we'll make any changes necessary to comply with the law.
Okay, we'll follow that advice, Clyde. Thank you. Future meetings are noted on the agenda. I'll do an around the table. Anything from Randy?
No, thanks, Bob.
Dan?
Nothing.
Dean?
Nothing here.
Sandy?
Nothing.
I have nothing. Chris, anything from you?
Oh, nothing here, Bob.
David, anything from the city administration? I saw him say no by waving. I guess we need to ask if there's public comment, right, Steve?
Correct. Any public comment?
None at this time.
Okay, then I think we're set.
Okay, well, I'm going to adjourn the meeting. Thank you all for your participation and input. It's been a busy morning, and stay safe and healthy, everybody.
Okay.
Thank you all.
Thank you, Bob. Thanks. Great meetings. Thank you.